You're not allowed to go on a real vacation anymore, but Canadian banks might give you a mortgage vacation instead. Thankfully, Canadian banks have agreed to provide some relief to people who have lost their jobs or business owners who have had to close up shop for a few weeks or months. They're allowed up to 6 months of mortgage deferral if they qualify. So in this video, I'm going to be talking about the potential upsides, potential downsides, and anything else that comes to my mind. If you're new here, please remember to like the video and subscribe to the channel. Okay, what exactly is happening? Why is this happening? I'm going to be repeating myself here a little, but this is only for individuals who have lost their jobs and can prove financial hardship. Banks are allowing, on a case-by-case basis, individuals to submit applications to qualify for a mortgage deferral. Keep in mind, every bank or lender is offering something slightly different, but I'll give you the gist of it. Remember, this is a mortgage deferral. Nobody will be forgiving your mortgage payment. A deferral in this context means putting it off. You're putting off your payment for a few months. Keep in mind, this is not payment forgiveness. Your payment is not disappearing. It's not going anywhere. It is simply not due yet. Yet is the key word here. A quick breakdown of what a mortgage payment consists of. There's the principal portion, which is what you've borrowed. It's the portion you are paying down. And then there's the interest portion, which is the lender's profit. It is the cost of you borrowing. Now, I've seen two options being offered by banks and lenders. One is deferring the principal portion and paying the interest, and the other is deferring both the principal and the interest portion. Under the first scenario, you're skipping your principal payment for 6 months and you're only paying the interest that you owe. If we take an example of $2,500 as your mortgage payment, with $1,500 being principal and $1,000 being interest, instead of paying $15,000 for those 6 months, you'll only be paying $6,000, which is your interest. You'll be saving $9,000. So paying $6,000 kind of sucks. That is an issue. That is cash in the garbage. That's money in the garbage. But you'll be saving $9,000 in cash at a time when you might need it the most. The other option available is deferring both the interest and principal portion. So having a $2,500 mortgage payment at 6 months, that's $15,000 in payments that you'll be deferring. That's saving you $15,000 in cash at a time when you might need it the most. So what are the upsides to this scenario? If you lost your job, if you have no income, if you're running low on cash, this gives you 6 months to try to get back on your feet, find another job, and it delays the bank foreclosing on your house by 6 months. Remember, this is a deferral, not a forgiveness, so you still owe the amount. Now, what happens to the amount you owe? I've seen two things that can happen. Either your mortgage term gets extended by 6 months, which sucks because you're 6 months further now from financial freedom or being debt-free on your house, or your mortgage term will be the same, but you just owe a higher amount over the remaining period to cover those 6 months you've missed, which also sucks because you're paying a higher amount in a time when you might not be able to afford it. I can't figure out which scenario is worse. Either your mortgage term gets extended or your mortgage term is the same, you're just paying a higher amount over that term. With the interest-only option, deferring your principal payment for 6 months at $1,000 a month at interest, your principal amount isn't going down. So your mortgage just got $6,000 more expensive. The other option, this is the rough part. Because you're not paying your principal stays the same, but then you're not paying your interest either. So the bank takes that and adds it to the balance you owe. Your total mortgage, the amount you owe, actually increases. This is compounding interest. This is interest on interest. This is what banks do. Let's go through some numbers. These are all fake numbers just for ease of explanation. If your mortgage is $500,000 at 3% a year, let's say your mortgage payment is the same, $2,500. You defer one payment, your mortgage is now $502,500 at 3%. If you defer the entire 6 months, 6 months gets added on, your mortgage is now $515,000 at 3%. This is obviously the much more expensive option. Now, I know what everyone is thinking. These are questions I've got from my clients and some of my colleagues, myself. This is not relief. How is this relief? This is not helping me. This is not helping anyone. I end up paying more overall. This seems devious or even egregious by the banks, but keep in mind, this is what Banks do. The alternative to getting this mortgage relief or mortgage vacation is you default on a payment. One bad scenario is your credit takes a big hit. Even worse, the end case, the worst case, is they foreclose on your home, you lose your house. Remember, the banks always win in these scenarios. They have a lien on your property. Your property is collateral for the loan that they gave you. This is how mortgages work. So, as egregious and devious as it seems by the banks, they're doing you a small, albeit a very small favor by allowing you to defer payments. But keep in mind, make no mistake, they want their money. This is what banks do. This is how they work. They run on interest. If you owe them and you miss a payment, that missed payment gets added to the amount you owe, and they charge even more interest, and they get happier. It's interest on interest. It's compounding interest. This is how banks work. I know it sucks. You're obviously in a bad situation already, and it seems the banks are taking even more advantage of you than they already are. But this does give you a little break. It does give you a chance for you and your family to get back on your feet. Another item I get asked, does a deferred payment hurt my credit score? No, a deferred payment does not count as a missed payment, so it shouldn't hurt your credit score, but it might. It is 100% up to the banks or lenders to ensure your account, like in their system, it doesn't say delinquent, default, or missed payment. Equifax, if you like a credit score provider, I guess, they don't go back and check with the lender like, hey, was this a mortgage relief? Was it mortgage vacation? Was it default? What happened here? If it's marked as delinquent, default, or missed payment, it will hurt your credit score. So as much as it is on the banks, lenders, managers, brokers, whoever you deal with, to make sure that it's correct on their system, I do say it's also up to you. If you're getting this mortgage relief, if you're getting a deferred payment, make sure to remind them, hey, make sure this is counted as deferred, not delinquent or default. Make sure it doesn't hurt my credit score. Last item, some of my clients like to roll their mortgage payment, their property taxes, and their house insurance into one giant payment every month. So they only see one amount coming out for those three items. But keep in mind, if you're deferring your mortgage, your property tax and your insurance is still owed. That is not deferred. The city and the insurance company still want their money. So if you defer your mortgage, you're still liable for those other two amounts. Make sure to take that into account when you're forecasting your cash flow for the next few weeks or few months. Alright, that's the video. It was a short one this week, but it does make 3 videos this week. Thanks for all the support. I can't believe some of my videos are getting thousands of views. One video even hit 11,000 views and it's only been a month. It's just insane. Please make sure to subscribe. I'll be closely monitoring the Canadian housing situation and creating videos providing my opinion as both an investor and a realtor. Also tune into my past videos on finance and investing.